even coined the term terrific trio. So compared to, they have Magnificent Seven. So the REITs, they are so much more in terms of quality. The US, they just tend to grow non-stop, and they have so much resilience in the...
Hey, Joo Parn. Hey, glad to have you here today. Thanks for taking the time off for this session. To start off, I see that you have a financial blog called Kaya Plus and also a YouTube channel, Invest with My Kaya Plus, right? So before we get
Yeah.
started on the actual questions, can you share how the name Kaya Plus actually come about?
Right. First of all, James, thank you for having me. I think for Kaya Plus, the name started off in also a weird way. Back then, when me and my partner Chun Bing, we wanted to start something. We wanted to come up with also a good name. But I think we were also stuck. But after a few rounds of thinking through and iterations, we eventually settled with Kaya Plus. So the name Kaya means rich, and I think the very surface end goal when it comes to investing is to eventually attain certain wealth, right? So, but we also understand that if the end goal is just being wealthy or achieving certain financial goals, it's just not that straightforward. It's not just that simple, in the sense that it's not just buy low, sell high, right? The punchline is that way, but I think to really attain the financial goal or attain certain wealth status, it has to be of a systematic way. It has to be with some sort of principles. That's why it comes with a plus. So I think we also took a little bit of idea from the iPhone models. If you have iPhone 11 Pro Plus, so we thought of that from that perspective, and think that yes, you need to achieve, you want to achieve certain financial goals, but it shouldn't be just from that aspect. Something has to come in and say that this is the way. So that's why we eventually settled with Kaya Plus as the name. Yeah.
I didn't know Kaya means rich. Is that in how does it translate from Kaya to being rich? What's the
So
meaning?
Kaya means rich in Bahasa, in Malay. So our roots or our starting base was basically on the Malaysian Stock Exchange and Malaysia markets. But as I slowly mature, slowly grow, I also went into Singapore stocks and also stocks around the world. So that is how everything started.
Yeah, nice. Wow, okay. That's very interesting. Kaya is rich. Okay,
Yeah.
so next question that I have, right, is how do you start investing? Do you start investing when you founded the blog or just way before that?
I started investing way I think we'll say a little bit before the blog or website was started. So I think I share pretty much the similar journey with those most of the investors out there, which is we want to earn or we want to profit from the stock market. And the first few approach was just to try and error different kinds of methodologies. I started off with technical analysis. Then I just found out that yes, there are a lot of
Not your cup of
principles,
tea.
there are a lot of chart reading, but not everything turns out the way that you want it to be, right? And I just felt lost, and I think that there should be another way that is more logical, that is more dependable, and then that's where I switched to proper fundamental or investing. And as I slowly read more, I slowly analyzed more. I also shared these findings to any friends or any interested person, and that is where my current partner says to me that since you already have all this information, why don't just put it properly into a website or blog, and just share it somewhat to who is interested to know more, and really get the message and also the analytical thought process out. And from there, we just grew our readership and also our followers.
That's cool. That's cool. So you are like documenting down your investing journey in the blog itself, lah, to just share
Yes.
with the audience.
Yeah.
Nice. So talking about your investing strategy, right? So how has it changed from TA to now? So you are adopting a more value investing, or is it growth investing? What kind of strategy that you are using now?
I think a lot of people would kind of differentiate the different types of fundamental investing. But I think at the end of the day, the big picture of proper fundamental investing is that what we see in terms of the current valuation of the company right now, it is under the fair value of what the market currently perceives it to be, and hence we want to take a position to profit from it eventually when market realize that, oh, I have been actually pricing the company at a wrong valuation. And then you drill deeper down, then you have deep value, you have value growth, you have dividend investing. I tend to see myself more as a value growth investor, but I also have a very soft heart for dividend investing. I do sometimes
Uh,
look at deep value case studies, but I have not still reached the stage where I am very happy to put money on stock that maybe 80% of the market thinks is wrong and eventually come out to be as right. I have still not have the appetite yet.
then so maybe I just want to ask, you started off in Malaysia. So are your current holdings or stocks inside Malaysia, or have you sort of branched out to Singapore and US stocks like what you mentioned just now?
Yes, so when I first started out my investing journey, 100% of my holdings were in Malaysia. There was also the time where I started my working career in Malaysia. So it's very common for investors, especially from Malaysia, to be very comfortable with just investing within your home ground. Soon after that, I came over to Singapore for a career progression. And there was also the time where I got the opportunity to look at stocks outside of Malaysia. And it really, really just broke my mind to see how, even though it's just across the causeway, how certain companies or certain industry has more
Yeah,
advantage of compared to Malaysia. I would say especially the Singapore banks in particular, and also the REITs. They are so much more in terms of quality compared to the Malaysia counterparts. And then when I also started to look at the US companies, there was also another mind changing kind of scenario for me, because these companies, especially from the US, they just tend to grow non-stop, and they have so much resilience in them. And some of them have evolved over time, where you look back 10 years ago when you invested in that company, oh, back then it was probably just a phone company, but it has evolved to become a company that has, laptops, Surface Pros, kind of approach, and how the company, can continue to innovate. This you don't get a lot in particular in the local Malaysia and Singapore companies.
yeah, definitely. Yeah. So that's why actually for Singaporeans, we also look overseas to US a lot of the time. Lah. Yeah. But are there any top picks that you can share, like from your portfolio and things like that?
I tend to have a very political answer when being asked for top picks, because I think there are a lot of scenarios where if I'm going to an event and people just ask me on the spot, what stocks do I recommend, or what stocks do I really have a long-term view, I would always say the Singapore banks. I even coined the term terrific trio. So compared to, they have Magnificent Seven,
Sure.
we previously had Bank. So I think the Singapore banks are very underappreciated. And I think from their governance, from their prudence, and also from their growth prospect, they are actually even better than the ones in the US, right? So in terms of growth, we see the Singaporean banks actually growing at a much faster rate compared to their US counterpart. And And if you look at the geographical catalyst and prospect, Southeast Asia is actually booming at a higher and a faster rate compared to the US and also probably other parts of the world as well. So I always say that, but if you don't see me again or if you don't come across me again, I think for other companies, the fundamentals or the catalyst can change overnight. But I think for the banks, they're pretty safe. And I think the roadway for their growth, especially for Singaporean ones, is still quite long, right? We still see a lot of prospects and catalysts for Southeast Asia to continue growing at a fast pace. And banks would definitely benefit from that.
Yeah, that's a very good answer. Like cannot go wrong answer.
You can go around.
Because that's what
Yes.
all the Singaporeans like to hear as well.
Yeah.
Okay,
Yeah,
then
yeah.
so how I noticed you talk a lot about like growth prospects for the banks, like geopolitical wise and that kind of stuff. But actually, how do you conduct your research? Is there a checklist that you go by, or do you do screening or kind of thing?
I think it also depends case to case on what type of investments I'm looking at. So for dividend paying companies, there is actually a framework personally that I use. So it's like in a layman's sense a checklist. So you have to go through this checklist and whether this company fulfill the criteria or pass through the checklist or not. I would say at the end of the day, nothing is 100% foolproof, but so long as you've done your homework, especially for the dividend paying counters, it is quite, I would say, a straight approach that if it already passes all the criteria you set out, then chances are it is going to be a good dividend paying company because you have done all your due diligence, etc. Where else for growth companies, where they are, operating in a new kind of situations, or they are, finding ways to grow a certain niche market that hasn't had certain presence before, then you need to be a little bit more theoretical about it. So if a company comes out and say that here I'm going to solve this particular problem, obesity, let's say for example. So this is the company is a drug company. They say that this particular offering can help to tackle the obesity market, and it's worth this much. And from there, you need to turn that into calculations. Okay, out of this market, total market, what is the market share that you think a company can attain, and from that, how much more top line, bottom line you can contribute to a company. So various ways to do so, and for different kinds of scenarios as well.
Okay, thanks for sharing. Yeah. Okay, and then next on to our next question. Where else do you park your money other than stocks?
I think most of my money is in stock itself. So a lot of people would have different buckets. For me, I try to play around where if there is the need of to withdraw some certain monies, at least it's parked into certain stocks that is quite stable, relatively stable, and I think it's also having a foresight. So if you have the foresight of saving enough at first for the first few months emergency, then I think the balance of it you can park into relatively safer investments or relatively safer stocks, and then the balance according to your risk appetite into more higher risk stocks. But for me, I think the amount that I need is actually parked in just a basic savings account. And then the balance will be into stocks and equities.
Okay. So you don't really look at other asset classes like gold, like Bitcoin, things like that, lah.
A very small allocation compared to the total portfolio.
Okay. Thank you. All right. So now, can you share some of your investing mistakes throughout the whole journey?
Well, I think there are a lot of mistakes that I've made. And I think the good thing about it is every time there's a mistake, I have to acknowledge it, and I have to also look at things, whether I need to cut loss or whether I'm waiting for a rebound to reduce my holdings. I think especially one that is kind of memorable would be C Limited. So back then when C was growing their numbers, their top lines at very low interest rates, people were too fixated on how high or how fast a company can grow and how it can, eventually get a strong foothold in Southeast Asia. And fast forward to today, we have already seen the company, getting a strong foothold in terms of e-commerce. But back then, when Garena or the e-gaming arm was actually funding the growth of their e-commerce or Shopee, we were okay to say that it's a
They
no-brainer
go
kind
for
of
the
growth projection. But coming to a high interest rate where suddenly everyone's interest or attention is fixated to bottom line, then you see the company like scrambling to do what the public or the analysts expects them to do, which is to report an operating profit. And from that aspect, you can see that things have taken a switch. E-commerce should be profitable this year, but sadly, the Garena is actually losing market share, losing their user base at a slow level, and that is something that back then, if that were to happen, it was a strict and clear-cut no-go or run from this investment. So I think one of the most memorable lessons that I had, and it actually made me to think more, to actually ask more questions or to be more critical of companies that I want to invest in the future. Yeah.
So going forward, you will probably look at the bottom line more than maybe the potential upside, if you were to
Yes.
summarize it.
Yeah.
Yeah. Actually, I also make a couple of similar mistakes. So one stock that I invested in is Fiverr. So it also went up all the way. Then like freelancing, actually due to especially like due to COVID, everyone working from home, got freelance and everything, and then in the end, the growth just came down all the way. But anyway, so this is also one of my investing mistake lah. All right. So next question. So what is your retirement plan like? Do you have any plan or to retire in don't know by what age or things like that?
Of course, I think the ideal retirement plan will be ASAP, as soon as possible.
ASAP. Yeah.
Um, yes. I think as I slowly hone and improve myself as an investor, I also kind of see how my retirement would be like, in a sense that for me, retirement is very straightforward, which is in essence freedom, right? A lot of people think about it like you need to have so much money in the bank that you don't need to worry about working, or you can lead the lifestyle that you want. But I think being a passionate investor also makes me see that and understand that I don't think I am someone who if you give me all the money in the world, I would sit down and do nothing, or I would just go all out to enjoy my life. Because at the end of the day, I find myself getting very intrigued and getting very entertained by just analyzing companies. And it's something that I think even if I reach the kind of status where I don't need to worry about money, I will still see myself as logging onto my computer, reading through statements, analyzing companies, writing thesis articles of certain random things. It can be of a certain subsector, and how this thought process can actually form a cornerstone or foundation to an investment thesis, or can it paint a bearish or bullish prospect kind of catalyst towards certain companies. I think coming to Singapore also made me realize that I have sacrificed a lot of things in terms of time, in terms of events, opportunities to bond with my family and also my friends back in Malaysia. And I think what I really want when I hit the basic requirement to retirement is that I don't need to slave away. I don't need to sacrifice my time, my career in the expense of my things that I value much more, which is the intangible part, which is relationship and also connection with friends and family. Yeah.
Wow, well spoken. So, upon retirement, you'll be going back to Malaysia lah, to bond with your family and stuff like that.
I think from that aspect, the ideal case is that I am free to stay
Do
or
whatever you
go
want.
wherever I want. Yes.
Yeah, digital nomad.
Yes,
And that's
digital
my
nomad.
retirement plan as well. Like travel around the world and then just open up a laptop and then just talk about stocks. Yeah. Wow, nice. Okay, so last question that I have. So, any advice for our readers out here?
I would like to take the leaf out of a very impactful investing book that I read, which is Pulak Prasad's What Darwin Taught Me About Investing. So I think the first few chapters or first few pages is already very mind blown. And I think he put it in a very right way, in the sense that if you look at so many stocks, so many counters listed out there, not all companies will go up, right, in terms of price. Some or most will stay flat or go down, but there's only a few cream of the crop, right, that will always see their prices go up in the long run. So from that aspect, he says that investors will always make two kinds of mistake, which is the first mistake is buying the wrong company or missing out on the right company. So, but if you look at the stock universe, because there's so much more companies out there, and most companies tend to be the one that don't go up. It either stay flat or they go down. So to say no to an investment is much more important than to say yes to a particular investment. So learn to say no to a company. Try to throw as much stones to a company. Try to doubt it as much as possible. And when you eventually find no more reason to doubt of the company, then I think you've found a potential winner for your stock portfolio, right? Because if the company cannot go wrong, cannot doesn't stay complacent, is not mediocre, and all the tough questions, tough case studies that you throw at the company just is able to overcome it, then it can only go up from that perspective and from that point of view. Because at the end of the day, in the short term, market goes up and down for various reasons, but from a fundamental and from a very tacit point of view, if you do mid to long term investing, it will only go up because of the fundamentals of the company. And I think that is a very important lesson that I think most of us should adopt and learn to say no to most investment opportunities out there. Yeah.
Yeah. Wow, that's very wise words there. Thanks so much, Joo Parn. And for our
No
readers out there,
problem.
if you want, you can go check out his YouTube channel as well. It's Invest with MY Kaya Plus. All right.
Yeah.
Okay. So thank you,
Yeah.
Joo Parn again. Okay.
Hey,
See you
thanks,
next time.
James.
Bye bye.
All right. Bye
Bye bye.
bye.
Before we end off, if you find the video helpful, I would appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.